My trading strategy is honestly boring, but last month it made me $18,517 in profit, and that's not even my best month. I've been trading for 6 years now, and I've been consistently profitable for the last 4.5. I used to chase all the exciting strategies, sniper entries, 15 indicators on the chart, trying to catch every single move, but none of them made me consistent. The real breakthrough came when I simplified everything. I cut the noise, focused on only high probability setups, and just followed a clear process based on ICT concepts. Now I use one strategy, just one, and I trade it the same way every single day. It's boring because there's no guessing, no revenge trades, just structure, liquidity, and execution. In this video, I'm going to walk you through the exact strategy I've used to pull consistent $15,000 to $20,000 months. Then I'm going to show you live examples of real trades using the strategy so you can see exactly how it plays out in real time and how you can start using it for yourself. This is the same approach we use at AlgoPlus AI, and it has helped tons of traders finally get results after years of spinning their wheels. So if you're done chasing shiny strategies and just want something simple that actually works, this is it. So let's dive in. So this is a really simple 5-minute strategy which you can trade on XAU USD. So you don't need to worry about anything that happens before our trading time, but you need to worry about what happens during our 8 to 11 trading time. And as you can see right here, so this is exactly how it works. What would happen is we would have a market structure shift. And with that market structure shift, we want to see a liquidity sweep. So this is a 3-step model. We have our liquidity sweep, then we have our market structure shift, and we also have a rejection of the high. So those are 3 things we want to see when taking our entries. And what we'll do, we'll mark from high to low. In that way, we can actually mark out the 62% zone of our Fibonacci. So if you don't have the 62% zone of the Fibonacci, here are the actual settings which you will need to copy. Again, if you want us to pass and manage your funded challenge and you don't pay a single penny unless you get a payout, click the first link in the description and we'll show you exactly how we can help you do that. But let's get straight into the video. So using this strategy, we do guarantee you can pass a challenge because most of our students have actually passed a challenge using this strategy. So here's exactly how it works. So like I said, the 3-step model which we follow. So boom, first things first, you want to mark out is the liquidity. And then you want to see a rejection of the high. So here's the rejection of the high. And then a market structure shift. Boom. So this is the 3-step model, and this is very, very high probability. Why? Well, firstly, we have a run on liquidity, and this is what we need to keep the price moving. So price always does this just before it does have a reversal. And then after that, we have the rejection of the high. And this is another concept we actually need to see. So when we have a rejection of the high, this means that the highs are getting weaker. Price is getting weaker at these levels. Why? There has to be something causing the price to distribute. So you can see price failed to get above this. So now we know that price is getting stronger going towards the downside of the market. And then followed by that, we had a strong market structure shift with displacement. So that's our 3-rule confluence we want to see. Then we're going to take the Fibonacci. Using the settings I showed you guys, you're going to find the 62% of the zone, and you're going to mark from high to the lowest point. As you can see, marking from high to lowest point. There you go. High to lowest point. Put our short position. Put our stop loss just above the high. And what we're going to do, we're going to target a 1 to 2 R. So what we should actually do before even targeting anything, we want to check to see if there was more liquidity points that price could potentially target on the other side of the market. Because what this actually does is this increases our probability of the trade actually going towards the downside of the market. But we want to make sure these liquidity points are more than 1 to 2 R, just because that does increase our probability as well. And we don't want to be targeting less than 1 to 2 R. So as you can see, it does end up going much lower than 1 to 2 R. I think it does go to about a 1 to 3, 1 to 4R. As you can see, yes, it does end up going to a 1 to 4R. So you could have easily made 1 to 2R trading gold just by using this strategy. So make sure you guys do watch all the way to the end of this video if you want to know how to master this strategy correctly. And don't forget to click the first link in the description so that we can help you pass and manage your challenge guarantee, and you don't pay a single penny unless you get a payout. So now we're gonna get into the next example, and again it works so simple. So firstly, as you can see, boom 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 boom, we come to our trading time. We don't do absolutely anything. Here you can see we have liquidity sweep. Here you can see we have rejection of the high, and here you can see we have a market structure shift with displacement. So what we're gonna do, we're gonna mark from high, and we're gonna mark from high to low. So just before that reversal, we're gonna mark from high to low, and that way we're gonna get in on a 62% zone. We're gonna put our stop loss just above this high, and we're gonna look for a 1 to 2 risk to reward ratio. And again, like always, we want to check to see if there's some liquidity points that price can target. Maybe there's one right here. We could focus on that liquidity point. So you can see it did take out all these liquidity points already. There's actually one right here, but again, it's less than 1 to 2R. So now we just have to play it out and wait to see what price actually ends up doing. So you can see it does end up going much lower. I reckon about a 1 to 3R. And it does end up going to another 1 to 4. So as you can see, this is how you can catch deep moonshot trades on gold. And if you guys did enjoy this video, please don't forget to like, comment, subscribe, and we'll see you guys in the next one.